guys, welcome to Talking Money with Nozi Personal Finance Made Simple. Today I will speak about the advantages and disadvantages of investing in ETFs and individual stocks or shares. If you don't know what ETFs are, please click on the link that is appearing on your screen right now to watch where I explain about ETFs. We will start with the advantages of investing in individual shares compared to ETFs. Number one is control. When you buy individual shares, you get to choose which shares you want to buy. But with ETFs, you have no control. When you buy an ETF, you're buying a group of companies that have been put together on your behalf by professionals, and you have no choice about which companies go into an ETF. Another advantage of buying individual shares is that you have the potential of higher returns compared to ETFs. Now I am showing you the difference between an ETF and the potential growth of an individual stock. So when the Afrox 40 ETF, the oldest ETF on the JSE, when it first launched, it says after the Afrox 40 launched, it closed its first day of trading at a price of R7.74 on 27 November 2000. This is an Easy Equities blog, so you can also go and read about it. So if you had bought 1,000 Afrox 40 ETFs, you are going to pay approximately 7,740 Rand, right? That was going to give you 1,000 ETFs. How much would those ETFs be worth today? So this is the Easy Equities website. I just logged in and clicked on Afrox 40. Afrox 40 is selling at 63 Rand 30 today. So what this means is that your 7,740, which you invested in the year 2000, is now worth 63,300 because 1,000, which is the number of shares that you would have bought, times the share price gives you 63,300. Now, what about Capitec? I'm going to go to Google Finance. You just type in the name of the company and then the graph comes up. I clicked on Max so you can see how the share price has performed over the years. So Capitec Bank first listed on the JSE in 2002. So if I just move my mouse right to 2002, let's see the share price. It was around R1.35. This is in July 2002. So let's say that you bought 1,000 Capitec shares back then in 2002. It was gonna cost you plus minus 2,000 Rand, right? Today, how much is one Capitec share worth? Well, we can go right up to the graph and have a look. Okay, so the last price that is quoted there was for 3 December 2021. The price of one Capitec share in December 2021 is now 1,855 Rand. Let me confirm that by going into the Easy Equities website. Let me just click on Invest Now, and I'm going to look for Capitec so that I can show you. Let me just type Capi, and Capitec will come up. Let me click on it. So actually, one share of Capitec is now worth 1,849 Rand and 69 cents. So 1,000 shares multiplied by 1,849.69. This gives us 1,849,690 Rand. So Capitec really blew the lights out with the growth compared to Afrox 40, which is the ETF. The third advantage of buying individual shares is that you are involved in some of the decision-making processes of the company or companies that you buy. You get to attend AGMs and you can cast your vote about important things that affect investors. This is another very useful and resourceful website. It's called sharenet.co.za. This is the market calendar. So you get to see when dividends are getting paid, and also where it says LDT, the last day to trade, meaning the last day that you should buy those shares to qualify for a dividend. And it also announces the AGM, the annual general meeting. So if you hold any of these shares in your portfolio, you can actually attend the meetings. And these days, because of COVID, You get to attend them online. You can take part in the meetings. You can listen to the CEO speaking, you can listen to the board of directors speaking, and you can vote. But with ETFs, you don't have voting rights for any of those companies that are within the ETF. The fourth advantage of individual shares is that you get to study and know important things about that company. Things like who owns the company, what products it sells, how much revenue and profits they make, the increasing earnings over time, how much debt they have, how much cash flow, etc. But with ETFs, it's a bunch of many different companies grouped together, and it's nearly impossible to study and know each and every company which belongs to all ETFs in great detail. Now, let's talk about the disadvantages of investing in individual shares as compared to investing in ETFs. Disadvantage number one is concentration risk. If you buy an individual company, you are taking on the risk of owning that business. Your success or failure depends on that one company. And the chances of something going wrong when you invest in individual companies is very high. And if you choose the wrong company, you could lose all your money. I am back at Google Finance, and this time I want to look at Steinhoff. So I'm just going to type there, Steinhoff, and it comes up. Click on it right over there, and I'm going to select Max. And you can see that something happened. Rather, let me click on 5 years so the graph is a little bit neater. So you can see that something terrible happened to Steinhoff. It was trading at around 60 Rand, around 56 Rand, and that it suddenly plummeted right at the end of 2017. Look at that steep drop. And the share price dropped right down to 4 Rand and 65 cents. And it hasn't recovered since then. It's just been struggling. 2019, 2020 struggling, 2021, and today that share price is around 2 Rand 50. ETFs are much safer because your money is invested in a group of many different companies, and the chances of losing all your money is reduced. Disadvantage number two of investing in individual shares is that you cannot be 100% sure if a company will be successful or not in the future. Nobody knew back in 2002 that Capitec would rise from 2 Rand 40 to 1,855 Rand per share. Also, nobody knew in advance that Steinhoff would fall from 56 Rand in November 2017 to just 4 Rand and 65 cents per share in December 2017. Companies can do really well or they can do really badly. And most times it is very hard to choose the winners from the losers. But when you buy a diversified local or global ETF, your money is automatically invested in different companies from different sectors and even from different countries. When you buy ETFs, you are taking away the guesswork because the professionals that manage the ETFs remove the losers and replace them with better companies on your behalf without you lifting a finger. When you invest in ETFs, stories like Steinhoff and other bad companies don't even upset you because it's handled for you and it does not greatly affect your investments. Here's the evidence where I say you don't have to worry about anything when you invest in ETFs. If a company does badly, it's removed from the ETF on your behalf. So here Satrix actually says what's new in the top 40 March 2018 index review. So in 2018, this is what Satrix 40 did. It says top 40 changes. At the March 2018 index review, we will see quite a few constituent changes to the top 40 index. So they're telling you that they're making changes. They say shares to be included in the top 40. So in 2018, the Foschini Group Limited was included, Truworths International, Imperial Holdings, as well as the Spar Group. Shares to be excluded from the top 40. So these guys were being removed. Fortress REIT Limited A, Fortress REIT Limited B, Into Properties Resilient REIT, and Steinhoff international holdings. So these are the changes that happened, and the people that owned these Satrix 40 shares didn't feel it, they didn't even notice it. It was done on their behalf. So this is what I love about investing in ETFs. They are cleaned on your behalf. Disadvantage number 3 is that it is more expensive to buy individual stocks compared to ETFs. In order for you to reduce the risk of losing your money, you must diversify your investments by investing in different companies that do different things. The standard is that you should invest in a minimum of 10 or more different companies in your portfolio. This means buying 10 different companies with 10 different prices, and you have to pay transaction costs 10 times. But when you buy an ETF, your money is invested in many companies in one transaction, and you pay one transaction cost, so it's cheaper. Look at the price of the S&P 500 ETF. It's 74 Rand. And basically, this is a group of America's 500 largest companies. 74 Rand, guys. Compare that with the cost of buying individual shares. Apple is around 2,600 Rand. Tesla, 18,000 Rand. Microsoft, 5,200 Rand. Facebook, 5,399 Rand. And these are just 4 shares. How much will it cost you to buy 10 or 20 or 500 shares individually? A lot of money. The fourth disadvantage of buying individual shares is the amount of time you have to spend doing research on companies. You cannot afford to just blindly invest your money into stocks without looking at important details like their revenue growth, profit growth, earnings per share growth, reduction of debt, free cash flow, etc. Basically, when you buy individual shares, you become married to those shares, and you have to watch them very closely and get to know a lot of details about them. You have to read news about them, read quarterly and annual reports to stay informed, and you have to do this continuously for as long as you own those shares. If you don't pay attention to this information, you will lose your money. But with ETFs, you don't have to do all of that work because it's done for you by professionals that manage the ETF. You just buy your diversified local and international ETFs, and your work is pretty much done, and you can live your life without ever reading a news article or a single financial statement. So this is just to highlight the important announcements which I missed concerning African Oxygen Limited, Afrox for short, as well as Value Group. Remember, I bought these companies. I did my research in the beginning. They were perfect. They were excellent investments. And I dropped the ball, right? I didn't read the announcements. So guys, that's why I say if you're going to buy individual shares, they become like your children, and you have to read every report, any announcement, any email that you get. And I received those communications, but I was just too busy. Life got in the way, which is why I prefer ETFs, because I don't have to constantly watch my email or read the news or go to the websites to check for announcements. If I just go down and scroll on this announcement, they did announce, they said, application for the delisting of Afrox ordinary shares expected to be lodged with JSE on Wednesday, 6th January. I mean, where were we on the 6th of January? I probably was on holiday or something. Last day to trade in order to be eligible to receive the scheme special dividend was 12th of January. And same thing with Value Group. They also announced their decision to delist. It says finalization announcement in respect of the scheme and delisting. So all I had to do was just to read my emails or go to the website and just read. But like I said, most of us are busy. We don't have time, or we're lazy to go through and read and check up on our investments. And this is exactly what I mean by you are married to your shares, and to avoid losing money, you need to keep up. If you know that you cannot keep up, ETFs are your baby. They're your thing. Because with ETFs, you don't have to do all of this. The fifth disadvantage of owning individual shares is that they go up and down a lot, and they cause emotional roller coasters and sleepless nights. One day your stocks are up, one day they're down, and this happens endlessly, like continuously. Diversified ETFs also move up and down, but to a lesser extent compared to individual shares. Seeing all that up and down movement can discourage people, especially new investors. Emotions play a big role in your success as an investor. And when you're scared as share prices fall or get excited as share prices rise, your chances of making emotional decisions that are costly are very high. Disadvantage number 6, choosing individual shares gives you a false sense of control, which can be costly. As an investor, you are not in control of the day-to-day business of a company, the decisions of the leadership, and the actions of employees. You also cannot control the economy and the politics, and you cannot control the laws of the country, and you definitely cannot control the future. You can do your research all you like and find good companies that are solid, the financials are good, the management team is excellent, and the company can be thriving and the share price is going up, then bam, out of the blue, something hits the company and their share price drops and never recovers. This actually happened to me with Afrox Gas and Value Group. I studied those two companies. I was like, yes, these are good companies. And I bought them. And in less than a year after I bought them, they were delisted from the JSE. There was no way I could have predicted that. No way. But with ETFs, you don't have to worry about delisting and the lack of control, because ETFs are a group of different companies sold in one product. If any company goes out of business or drops out of the stock market, it is simply replaced in the ETF by a better company on your behalf. With ETFs, you can literally go to sleep better at night because your money won't suddenly disappear overnight. There is safety and comfort in ETFs. Another disadvantage with individual shares is taxes. If you buy individual shares, you're going to have to pay tax on dividends as well as capital gains tax. Whereas with ETFs, you are able to buy them inside of your tax-free savings account. If you buy ETFs inside a tax-free savings account, you will not pay dividend withholding tax for local ETFs, and the biggest advantage is that you will never pay capital gains tax for any of your ETFs. So, since there are both advantages and disadvantages to investing in ETFs or individual shares, what then should you invest in? Well, this is how I personally invest. I split my investments between ETFs and individual shares. But I prefer ETFs more than I do individual shares. And so I allocate most of my money into ETFs. You also don't have to choose to invest in just shares only or just ETFs only. You can do both and get the best of both worlds. Okay guys, that's it for today's video. I really hope you enjoyed it. If you did, please click on the thumbs up button so that other people can find it on YouTube. Let's help the algorithm. If you want to get started with investing and you don't know where to begin, you can watch other videos on this channel to learn more, or you can buy my ebooks about investing, or you can book me for an online one-on-one session. My contact details are in the description below. Okay guys, I'll see you in the next video.